Before I give my introduction, I would like to invite you to take under the QR code. You will have 2 questions that we launched to the public. And if you have that code, you can answer. The first question is related to what are, in your view, the main advantages for an SME of being listed on a stock exchange? You will have 6 answers possible, of which one is other, so don't use other, please give an answer. Second question will then come later after my introduction, so you will have the time to adapt and to connect. So, we will try this afternoon in an hour to address the issue of how bringing more companies to the European listed primary markets and how to support better the growth of listed companies. We will explore, of course, different elements. We will explore the story of the IPOs. Certainly it will be one of the points we will address. And also we will try to improve the post-listing or address the issue of the post-listing conditions so that it becomes better. I have with me an excellent, experienced expert group. So I welcome over here, first of all, Madame Delphine Damarzit, the Chairman and CEO of Euronext Paris. I have Nicolas Kozakiewicz.
Very good.
Thank you. Okay. President of Nasdaq Copenhagen. I have Thomas Black Peterson, who is the CEO of the Associations of Listed Companies of Denmark. And I have Dark Brown, who is the Senior Regional Representative for the European Investment Fund, EIF, belonging, I think you are part of EBF, or not?
Part of the EIB.
Yeah. Okay.
The EIF is...
Yeah. So, for the first round, wait a moment, of questions. I do not know if in the meantime you found your way to the slides.
So I was going to give the answers, but
the answers are still not there.
No.
So then we continue another 5 minutes. And I start with the first round, and the first round is a round that is focused on the real problems we have in relation to the points I mentioned and that we want to improve. So my first question is to Madame Damarzit. From Euronext's perspective, what are the main advantages for a company to be listed on the stock market?
Yes. So
you will have certainly all the answers, I'm sure about that.
Well, that's why I wanted people to write down before I spoke, because then I'm going to tell you it's a little bit of all of this. I wanted to insist on starting with that because we are going to focus on the challenges. Because this is where we want to see progress, but we have to remember why we want better and better public markets and why this is important. Listing on public markets, on the stock exchange, I usually make a coalition of the reason in three big, I would say big brackets. The first one, of course, is access to financing. The specificity of the stock market is that it gives you an infinite, a permanent capital with no deadline. It's a bit of a, I would say, a distance to how much public markets are portrayed as being short-term. Mm-hmm. Of course, when you're listed, you're exposed to permanent valuation, bips and bumps, and exogenous factors will enter into play. And so there is a short-term effect, that is to say reactivity to the instant. But in reality, what is most important? You don't have, people won't ask for their money at a set date. And it makes things completely different. Your time horizon is infinite. And then, of course, it's for the success of your strategy to make it a good story rather than a complicated story. So permanent capital, because of course, sometimes private capital is described as being long-term because you start with a new investor and it will come back to you in 5 years. So at the beginning, 5 years is long. When it's 6 months at the end of the journey, it's very short term, and it's kind of something that clicks and can really hurt. So this is the first element. And in this capital, of course, we always focus on the IPO, but it's important to remember that secondary offerings are a multiple of the money raised at IPO. You can come back to the markets, you can pay your acquisitions in shares, etc., etc. So there's really this factor of entering into a completely new toolbox, and of course, a very big scale. So it's a change. Second advantage is something that is always a bit underestimated, and that companies that have joined the stock market will always tell us is more than what they expected: visibility and credibility. Especially if you're a new company, if you're B2B, you're known in your market maybe nationally, but when it comes to international clients, attracting talents, you will change dimension. There will be a stamp of credibility, and there will be a very big visibility factor. With all of that, of course, comes counterparts in terms of how you have to behave to live up to that expectation. But this is a clear boost. It comes with a lot of preparation, the IPO readiness, but this is an advantage that you will get. And lastly, and conjugating those two, you can enter into a growth journey while maintaining your independence. That also is a bit of a paradox, because sometimes people will portray the public market as being risky. You can have people who you don't know who is investing in your stock. There can be takeovers, etc. But if you think that you can go there with or without controlling your capital, you are asking people who you don't know, an anonymous crowd, to finance you, and they don't want to lead the company. They want you to lead it. They will give you the keys in exchange for a good strategy and credibility. And if you don't behave well, it will, there will be decisions, and you may end up surrendering the keys. But the big advantage is that you can attract investors who don't want to be in the driving seats. Mm-hmm. So again, if you compare, and you can have different ways and different strategies, you can have a strategic investor joining your company on the private market. It all starts very well because you've chosen them and it works well. After a while, it can become a bit complicated, especially when you add layers and layers. And again, especially tech companies who are joining our markets tell us one big relief of the IPO is to have a bit cleaned up the cap table and start a new journey with this new relationship. Again, it has counterparties. That is, given that you access to the public, to those people who don't want to be in the driving seat, you owe them transparency, good strategy, good financial information, good governance, etc., which in turn will make you more credible and more visible, and you will build from there. That's the good story, and this is the advantage. That's the micro picture. Yep. In terms of macro picture, and we will come back to that, it is absolutely essential for a country or for a continent to have public markets that can offer that on their soil, on the European soil. Because there's a cluster that will come up with that, a cluster of projects, of companies, of investors, of value generated. Those companies should be outperforming. The savers of those countries should invest to get performance, etc., etc. So this is also strategic, not only for the micro projects, the micro in the sense of microeconomic, not small, but also at the macro level for the trajectory of a continent. It is essential that public markets are functioning well and growing with this franchise of companies that can really develop themselves.
Okay, thank you. Anyway, I hear a number of arguments in the sense of, first of all, it's a balanced story. It's a story with advantages and disadvantages. And in the advantages, I see that the response of the people in the public are majorly in favor of the two first ones you have said: better access to finance and growth capital 76%, and interest and then increased visibility and credibility. But on the other hand, you say you have also to respect a number of basic elements that are the ones that are combined and connected with the fact that you are getting confidence of other ones, and that you have to respect transparency and rules and etc.
I think it's all connected. Obviously.
It's all connected. Yeah. Okay, but then I go to Nikolai. Then it's easier than your back name. I may
call me whatever you want. I'm not pleased.
Thank you. What are for you, for companies that are innovative and mid-size, the most biggest barriers to be and to go to the, or currently preventing them to go to the stock market?
Well, I think some of the topics that are listed right here are obviously super important. But I think we need to take a step back and sort of look at the league tables of Europe to put in place a good diagnosis of what it is that's actually going on and how come public markets are being used in one country versus in a different country. And if you look at a country like Denmark right now, we haven't had an IPO in
1,000 days.
Yes,
almost
1,000 days without an actual IPO in Denmark, which is, it's obviously embarrassing for me as an exchange head for Copenhagen to actually admit that. But thankfully, I'm a part of an exchange group which also covers Nasdaq in Stockholm, where we can say that when looking at the league tables, Stockholm is by far the best performing exchange in Europe when it comes to raising both primary and secondary capital. And we have exchanges out there which haven't had an IPO in this particular year, Copenhagen being one of them. So there's a great difference across the spectrum between the best performing and the worst performing. And obviously the diagnosis has to be about finding out what it is that Sweden does so well, as an example, as kind of the prime example of how to operate your capital markets. And basically it's both on the demand side and also on the supply side. So on the supply side, you have a vibrant ecosystem of entrepreneurs that understand the importance and also the relevance of capital markets and do not only tap into venture and private equity. On top of that, you have a venture and private equity market which appreciates the public market as an exit strategy, as an exit opportunity. The public markets obviously need to provide a sufficient valuation during those IPOs. That's obvious. Otherwise, some of those venture or private equity-owned companies could be transacted elsewhere outside the public markets. And then you have the demand side, which is basically driven from a very effective Pillar 1 and Pillar 3 pension system in Sweden, combined with a very high degree of financial literacy. So if you look at the Pillar 1 system in Sweden as an example, you have created this vibrant ecosystem of institutional investors that invest directly into SMEs. They have a dedicated mandate for investing into SMEs. That obviously means that when you have IPO prospects out there, they know that there's a 2 handful, 3 handful, 4 handful of very professional investors that understand how your business operates and also have the financial capability to write good ticket sizes and invest in your company. And that's obviously super comforting for companies seeking to go public. On top of that, you have a very vibrant retail investor community, which is supported by favorable tax regimes for private investors. So you have an ISK, which is an investment savings account, which is kind of the best of its kind across all of Europe when it comes to SIAs. We are super excited about the European proposal for what an SIA should look like. And basically, I just want to say to everybody who comes from the public side, look at the SIA or the ISK that's existing in Sweden. Because, it's going to drive a lot of retail engagement directly in the public market. And then on top of that, you also have regulatory transparency. You have an ecosystem of advisors. it becomes sort of a Pygmalion effect or a self-fulfilling prophecy when all of a sudden you have a public market that's vibrant, an IPO pipeline, an IPO environment that's vibrant. Then the advisors, they start to show up. Then you have certified advisors, you have auditors, you have legal advisors, you have investment banks that are there to support the SMEs when they do intend to go to the exchange. And that's extremely important that you have that ecosystem of advisors. But I think what's most important is the fact that you have strong demand for SMEs in general, supported by the private pension system and also by Pillar 3, i.e. retail investors that are financially literate and can invest and wants to invest directly in the public markets, not only in the blue chip stocks of the world, but also in the SME segments.
Okay. But when I listen to you, I remain with the question, why didn't you have any IPO in Denmark in the latest period, of course? But maybe Mr. Peterson has an answer. He is the CEO of the Association of Listed Companies, so you have the floor to explain how do you see, what are the main challenges for small and mid-cap companies trying to go to the stock market, in your eyes and your experience?
Yeah, and I'm talking about my experiences from Denmark as well. We have a large ecosystem of entrepreneurs and SMEs, and we have conferences with 10,000 people attending, and there are hundreds of speakers, and nobody talks about IPO. And IPO is for many founders not longer a goal, and we don't see them working towards an IPO. We have venture funding, and the conference talk about venture. And if you have American ventures coming in later, we know that the IPO will not be in Europe. We have some of the biggest companies or unicorns created the last 20 years in Denmark with 8,000 or 10,000 employees. They only have a few hundred in Europe. So we see companies leaving because of capital, and we see that they don't want to do the IPO in Europe. So venture funding or even selling your company to get rich fast are obviously most attracting for some. And a lot of people or founders, they don't know about IPO, and they don't know the possibilities, and they don't choose it. And one reason is that ideally the valuation of a listed company should be higher than an unlisted company, because you can easily sell your shares. But as it is in fact in Denmark at the moment, the valuation is lower if you do an IPO. So you need to make an IPO for other reasons than you will have a high exit for the funds, or you will have a higher valuation. And that was very different 5 years ago when we had a very vibrant IPO market in Denmark, and we had some maybe way too high valuations that have also scared investors that they will not participate in the IPOs. So it doesn't work as it should. And then when we have lack of investors and capital, we have low liquidity. This is both retail and retail and institutions. And we simply maybe do not have an ecosystem that talks about IPOing your company. So many of them have never had the question, have you ever considered listing your company? Nobody asks the question. So the last thing, and this is also related to Denmark, and I hope we have some Danish policymakers here as well, is the taxation system. So in Denmark, we have what we call an IPO demotivating tax system for founders, meaning that if they list a company, the tax is relatively 31% higher than if you sell your company or if you have venture or a non-listed company. And just to put a number in, the net tax is 55% if you list your company on the capital gain. And after 7 years, you are partly also taxed on unrealized gain, meaning even though you want to keep your share in the long term, you still get taxed. We have seen founders going bankrupt because they lost everything. If the stock price goes up a lot and falls back again, then you can have a tax that is higher than the value of your shares. That has been a big issue in Denmark, and Denmark is the only country in the world that are taxing unrealized capital gain in the stock market. We need to have a taxation that will not favor unlisted companies, and it should be the opposite. We should have a taxation system that will motivate for IPO. And just to put it in perspective on long term, that in Denmark, I think it was before 1991, if you had your shares more than 3 years, it's still such like that in some countries, there was no tax. But now the net tax is 55. And that is not really the way to create entrepreneurs and big companies, that we tax the money even before it's made.
But if I may summarize, I don't hear you say that there is no interest in the stock markets, but there is no interest today in the present stock market with the conditions that are surrounding the investor that goes to the stock market. Is that what you say, or is there no interest anymore from companies to start their process from a startup and move to find the capital? Where do they find the capital if they don't go to the stock market?
They go for venture funding.
Okay.
Or they don't get the capital, go for
But they
American
still need
investors.
capital.
They still need capital.
They still need capital.
And we will probably see the IPO window opening soon, and maybe see a few IPOs.
Yeah.
But a lot of huge investors or funds or private equity funds say they will never list anything in Denmark, and maybe not even in Europe.
Yeah. Well, I think it's not every country in Europe is the same. So I presume that if each country has his own or problems or opportunities, and we should have a view on the total, which is of course a very complex issue in a fragmented European environment as such.
But look, if I just may, just 2 seconds to add to what Delphine said before, I think it's important that everybody understands that public markets or exchanges, they do not only serve companies or issuers by the timing of the IPO. It's very important that listed companies, future prospects for listed companies, but also the existing listed companies, appreciate and value what the exchange actually provides. And if you look at capital raised in Europe over the last, I think it's the last 6 years, 80% of all capital raised, both the primary issues and then the secondary tranches, 80% of that is raised in secondary transactions. And that's what the public markets can do. And I think that's what we need to remind people who go out there consistently saying that the capital markets are broken or that the exchanges don't work for raising capital. Well, the fact of the matter is that the companies that are listed on exchanges across Europe actively use exchanges to raise capital in secondary rounds. Yeah. And that's an important narrative.
Yeah, okay. But I retain that in the very early beginnings, they believe more in the American system than in the Danish system. Yeah. That's what I hear. Yeah. Okay, good. But before we go to an eventual answer, let's launch the second question for the public. And that question is the following. Which action would have the biggest impact to make European capital markets more attractive for growth companies? You still have no answer heard here, but maybe you have an opinion. And you have again 5 possibilities and other as the last one, but I prefer you not to choose because it doesn't bring us nowhere. So please, if you go to the second one, then we will continue now the first round by asking Mr. Brown, is the European Investment Fund working to close the financing gap for companies aiming to scale and prepare for public markets? So maybe you have the answer to what we just heard.
No, I definitely don't have the answer from the experts on this panel in the IPO stage. I think to take a macro view, I mean, obviously EIF is in the venture space, that's and private equity. So we're in the private markets. I think to take a step back, why is EIF in the space? I mean, we're here for European competitiveness, so from a policy point of view, and we're here for kind of tech sovereignty, this idea of self-reliance. So IPO markets are essential. They're essential for a working capital markets union. I think the Commission have been very clear on that. So a lot of the experts on this panel will be able to say how we get there. I think what's important for EIF is to make sure that SMEs have the essential financing they need, both on equity and debt products, and to ensure that we engage with the ecosystem, engage with the exchanges as we start to develop and think about possible IPO issues or challenges. So right now at the EIB group, There is a large-scale initiative called Tech EU, which is about taking 75 billion and mobilizing 250 billion. And as part of that, scale-up financing is one issue. So how do we ensure we get Europeans champions, tech champions? And I know that's focusing on the kind of the top, the unicorns, and not necessarily broad SMEs, but that is important. And the second thing is the exit markets, of which the IPO. And I think what Nikolai said is really important. It's the pre-IPO phase where I think an organization like EIF can really enhance access to finance, but also work with the ecosystem in trying to get that.
Okay.
I know that from Thomas' point of view, that it's true. Most conferences you will go to, at the end of the day, these are venture capital funds on private terms, where most LPs will want a return. They'll want to. So the exit of that is important. For us, for entrepreneurs that we speak to, being in Europe and staying in Europe is important. So as a European institution, our duty, our role, and we are public, we're civil servants, our duty to serve Europe is to figure out how to keep them in Europe.
Yep.
And to do that, we need the people around this table to work with us.
Yep.
I'm not saying EIF has got everything right. It's true on the early stage, we cannot lose early stage financing. The innovation and across verticals is essential. At the scale-up side, what we believe one of the issues is at the current moment is that we don't have large-scale funds, so mega funds that can do large-scale tickets. We've already discussed off the panel that's not necessarily the solution to listing. But how do we integrate that sort of thinking to say, okay, let's think of a pre-IPO mechanism or a channel that we can collectively work with exchanges, with associations, in order to foster a culture where listing is part of the journey. I mean, we see both paths, but at the end of the day, you need to have returns. So an entrepreneur needs return. But most entrepreneurs we talk to, this is their life, right? The blood, sweat, and tears. And so they want to continue that journey. So it's probably more of a priority focus than I've ever seen in my career. The focus now on the public sector, on IPO and pre-IPO financing in the exit markets.
I just wanted to ask you the question. I think the public is not totally aware of what you are doing in AIF as such, I presume. The people here certainly are, but most of the people do not know. How long does the AIF exist already?
So in a nutshell, we are 30 years old. We're a risk financing arm of the EIB group, and we're there to provide access to finance for SMEs. That's essentially the mandate. How we do that is through two products: debt, which is predominantly portfolio guarantees, where we work with banks across Europe to incentivize on lending to SMEs, and equity, where we do venture capital and private equity. So we're a disintermediated organization. We're never working directly with the companies and the SMEs. That's the IB with a number of their products. We are an asset manager. The simple way to think of an asset manager, our assets come predominantly from the public sector. Sorry. The goal, and it's already been mentioned, I think we'll touch upon it later, is catalyzing private sector funding is essential, particularly if we even want to get to the IPO and listing. If we don't get the pension funds, insurance companies allocating much larger into the space, it's going to be much more difficult.
Okay. So let's have a look at the second reaction. It's already on the screen, so there is very clear indication for two elements: simple increasing incentive for long-term investments. So I presume that a good tax regime on the long term could be a very good solution to motivate people
to list their company.
Okay, and simplifying listing and disclosure rules. Listing Act, for example, is one of the solutions, but we will come to one that is all the elements in relation to the regulation that is yesterday attacked in the Schumpeter discussion very strongly by the speaker before the professor was speaking. So let's then go to the second part of our discussions today. We have now heard all the problems. Let's try to talk about the solutions and discuss how regulation, market infrastructure and financial tools can work together to ease the path of IPOs and strengthen post-listing performance. So my first question is again to you. How can regulatory initiatives such as the Listing Act and work under the Savings and Investment Union. It's a name that is for us that are in the business very well known, but I think for many people in the public not really known. It's something that is a name but don't know the contact. How can that work better and support efficient, attractive IPO pathways in Europe?
Thank you. Just I want to thank Thomas and Nicolai, because I thought France was a tax hell, but I found my master. So in France, we do not actively disincentivize public markets, but our specificity is that most of the savings are intermediated, and they are intermediated through life insurance, so they fall under Solvency II. And so because of that, the institutional money is quite discouraged by prudential and IFRS entanglement rules. I mean, those two together combine into discouraging, paradoxically, public market equity compared to private market, because strangely enough, IFRS will prefer the illiquid but unvolatile private equity rather than the liquid but volatile in perception. Especially if you combine that with quarterly reporting of public equity. So it means that, of course, I will go back. I will cover the issue of savings, which is super important. Savings channeling. We will be able to evolve, and the securities account is a very good initiative. But those local systems come from history, and they're difficult to move. I think we have 2 trillions of euros invested in life insurance in France. It's not going to disappear soon, so we need to work on, and it's a difficult task. IFRS and Solvency II. It's a very big thing to move, but we have to recognize that. So sorry, I will now answer your question. This time I disagree with the result. I think the Listing Act is useful. We've supported it. It has simplified things, especially and we're talking about that again. Secondary offerings will now be much easier. There's been a simplification of prospectus. The level of the threshold has gone a bit up, but it's not the big thing, because companies understand that if they get listed, they will have those rules. We have to avoid that they are too hard and disproportionate for SMEs, and we could do better. But the fundamentals are the first question: long-term investment and its impact on improving secondary market liquidity. Because it's always what is available at IPO, and how liquid will I be, so that my valuation is not. The valuation is the result of my good performance and the liquidity. You can have good performance. If there's no liquidity, you will probably be undervalued and unhappy about your valuation. And of course, you can have liquidity, but if you're not, if you perform poorly in terms of the performance of the company, then this is your fault. So those really are the two things, and they are linked. And for me, what we need, the fundamentals are two things. We need long-term investment capacities, pools of savings. You can have that through pension funds and or retail participation, securities and financial securities accounts that are well organized and also well distributed. In France, we have a great equivalent of an ISK, except that the banks are not really thrilled as to sell it, because they don't get enough reward for it, and it's more complicated to operate. So they prefer to sell life insurance, where they have some, remuneration, and it's also easier to sell in the mass market. We also need to recognize that the EU regulation has, inflated the questionnaire that you have to answer. If you want to open a securities account in Europe, you really have to say on the Bible that you really, really want to lose it all, that you understand it's very, very risky, etc., etc. So the long-term investment channeling is super important, and the difficulty is that it is not a EU competency. It's really a domestic responsibility. So we've gone as far as having now a recommendation, and there is work on a label. But it's something that has to be. We need to have the direction, the strategy, and that has, for the first time, been really expressed. And it needs then to be implemented at the national level, recognizing, like I said, that we also have to understand that some of the tools we have at the EU level is the prudential requirements, the IFRS. How could we look also at all the little impediments that will discourage institutional money to go into the public markets? And the second one is making Europe a domestic market. Because sometimes the solution is let's have one exchange, let's this, let's that. It's it's not the number of, and we'll cover that later. It's not the number of private actors that counts. It's whether we have a big pond or very small ponds. And there are countries where there are actually pension funds. The problem is that they don't invest in Europe. Why? Because they want to diversify. And their domestic market is probably too small for the domestic bias to actually be reasonable. So from a very logical point of view, they will look for a big pond and with a lot of performance. And since it is not so easy to access all the different little ponds in Europe of projects, what they do is that they invest into reaching out to the big next pond, which is across the Atlantic, the US. Because it's complicated to go there and find your place. It's not an easy market, and we come back to that. But it's big, so you have to go there. And once you do that, it's enough. And so if we do not work together, and this is what is the ultimate goal of the Saving and Investment Union, making it a domestic market, which is, another way of saying you should be able to access your neighbors' investors as easily as your own country's investors. It's more easy to say than do it. Then you have a domestic market. Then it's a big pond. It's the biggest, one of the biggest continent in saving. And we stop having to channel our savings to the US so that they can invest back into our private or public companies. Because this is what we do. This equity paradox. We finance their debt. They leverage. With the debt that we finance, they leverage their equity that they invest in our companies, and they get the performance. That's really stupid. But once I've said that, it's a lot of different things that have to work together. So at the primary listing level, we have a number of us. It's the case for Nasdaq Nordics. It's the case for Euronext. We've done the job of being big enough and wanting to grow. To offer exchanges that are, up to the scale, so that we can have all the members, we can have the investors connected, the international, the local ones, etc., and we can fulfill this notion. Yeah. Then we need to go one step further in terms of the synergies that we can extract from this consolidation, and the difficulty is then how do we work with. And I'm going to be not going to go into too much details because it's complicated, but it's a lot then about the rest of the chain, securities chain in post-trade, that will usually be the real fragmentation. Voilà, sorry, I could go on forever, and I have to give you back the mic, sorry. So those two things, to just sum up, investment and a domestic market at the scale of Europe.
Yeah. And if I may, can I just double click a little bit on what you said in the beginning in terms of the importance of the local pension system? So European pension funds are deliberately saying or actively saying, yes, we do invest quite a lot in public equity markets, but we invest the majority of our capital in the US because that's where the highest returns are. I think that's a disaster. I think that pension companies, life insurance companies, all kinds of asset managers have a much larger societal contract. I think they almost have a fiduciary duty to support the area in which they operate. Mm-hmm. I think that pension funds, I don't know whether you can use a carrot or a stick or whatever it is, but when I look at the Danish pension industry, I want them to care about the local SMEs here as well. I want them to take part in funding that journey, in funding welfare, in funding job creation, in funding growth for the local society. So I think it's too easy for the pension industry to just say, we're just going to chase returns. And if the returns are coming from the Max 7s across the Atlantic, that's not good enough.
Okay.
Can I also comment here, because that was my next thing I will say, that
Sorry.
we have in Denmark maybe one of the strongest pension systems in Europe, and most of Northern Europe have a lot of funds. In Denmark, about a year ago, the media found out that the Danish pension funds invested 100 million or more than 100 million euro in Temu in China. And that was a big news, and they stopped doing that. But what they didn't think about is that they also financed all the Chinese car manufacturers to produce electrical cars. So that's all financed by both American and European pension funds. So we want the pension funds to create co-investment funds so that can invest in listed SMEs. We have in Denmark one fund only doing SME or small cap investments, and they have asked all pension funds in Denmark twice, will you please put money in this fund? And they all said no. In Sweden, they have like 10 or 15 small cap funds, but the reasons why the pension funds will not invest in small cap or SMEs is the reporting burden. So they say, if we invest in a fund manager who is very experienced and have very good track record, why do we need to report on every single small portfolio allocation in a fund back to the financial authority in Denmark? So I don't know if it's the same in all EU countries. This is EU law, or this is just Denmark doing some stupid requirements for the pension funds, so they will not invest in SME. So I think one of the solutions is maybe we should remove some of the burdens from the fund, and then they'll have no excuse. And then they go and invest in the listed SMEs as well, because they don't. And even Denmark, we have like less than 3% invested in listed companies of the full investment amount, also the full pension amount. It's less than 3%.
Yeah, and I'm not expecting them to make direct investments in every SME company that goes on the exchange. If they want to do co-investments together with Derek's funds, love it.
I think I think it's really important. I think there's a shift, though. I think what we're seeing across Europe, and we have a lot of engagement with pension funds, there's a cultural shift. I think we can allude to what's happening geopolitically, and that's important. This essence, Nikolai, that you're saying, that pension fund managers can support their pensioners twice. At the pension, you're right, we need returns to be able to pay for the pensioners. But you can support their careers, their livelihoods. And I think the first time when we walked in a room and we'd give that argument 2 years ago, it would be very fluffy. And frankly, we wouldn't last long in the room. Now there's a complete shift. That actually argument is carrying a weight, and there's a responsibility that's been understood. I think we are going to see in the next 3-5 years a fairly dramatic shift.
We hope so. but the discussion is not good enough, and I think that's one of the elephants in the room of the EU. We don't ask. You do, and I think also, but they invest in American shares.
Yeah.
But sorry, I think we've taken the power. Sorry.
I don't think we will go to the third round, but let's continue the discussion.
It's a good sign. I think we should recognize that we cannot always have double binds or paradoxical injunctions, because the problem is that the EU has been too much driven by the instrument they have. And the instrument you have is a number of things like distribution regulation. And we end up with a questionnaire, and the logic is, we will make sure that the retail savers are super warned about what could happen, and then there will be trust, and then they will invest well. Yes, but if you discourage them in the process, it will not happen. Let's be a bit realistic. There's a lot about prudential requirements, etc. So we know the different countries, etc., tend to not trust each other. So we've given independent agencies a lot of powers, and when we listen to EIOPA, it's not part of their mandate to consider that life insurance, when it's 2 trillion in a country, maybe we should think a bit about the macro impact. It's, when you tell them that, they say, okay, sorry, but, this is really frightening me. Let's make sure it never happens. So at one point, we have to connect that and work on the big elements. So for one country, it will be this. For Denmark, it will be trying to unlock those things very strange that you've mentioned. For my country, it would be something different. For Italy, it would be something different. For Sweden, it's great. It's the example of everyone. But, I was told also that domestic bias is a little decreasing. So it's never a given, etc., etc. And we have many countries in Europe where there is simply no securities account at all. It's all in banking accounts. So we have to work from our field, but we also have to recognize that it's not, we have to have several objectives and not only one, because I agree that the questions are now admittable, because before it was impossible when we were talking about strategic autonomy, etc. That type of thing, it was, we were very suspect of wanting to do something that was conflicted, etc. So now we are allowed to have those things, but the actual action, not really. When I look at what is going to be offered under the Saving and Investment Union, according to what we hear, it's a bit more of the same of opening up of our markets. So it's on something very specific, which is the way trading is organized. Just going to say, let's open more to competition. Is this the priority? I'm not sure.
Okay.
Sorry for stealing the show, Luc. Back to you.
What strikes me, sorry. What strikes me as a former co-owner of a listed company is that we talk about who will bring the money and we don't talk about regulation and burden. Very strange to hear that. And second, what I also hear, if I may, you have given a kind of an incentive for an answer for the European former the old Europe, who has who has pension funds, who has capacities to focus on their own countries or on the global European environment. But I have also been constantly looking at the Central European countries, where I had plants in Poland and in Hungary and in Romania. And in Poland they found their way, but in the other places that they didn't found their way. And our members over there complain because they do not find enough investors there, because they don't have those pension funds. So we are trying to find solutions today that are very interesting. I'm very pleased to hear what you say, but at the same time, we are not solving the total picture, I think. So we will have to also give an answer someday, but not today, because otherwise we will not make it in the 14 minutes that are left on those aspects. But it's a very interesting debate that shows how complex the issue in total is. So let's come back then to my last round, where we would like to have some more vision on the future. And I had a question for you, Danak, looking ahead, what do you think from your side, with what you have heard now, that should be the new initiatives for innovative financial instruments to allow companies to go in that early stage to the public market? What do you think? I'm thinking about my own experience. I have been the president of the Marshall Plan in the Walloon region, where we were building an economical environment that was attractive for companies, where we combined money from the authorities under the form of subsidies, money from the private, with young initiatives on innovative projects. And it was very successful in terms of interest. And my jury has done an extremely good work, because 75% of those projects have been realized. So, I mean, the combination of what you as EIF represents, the combination of what we are looking at other sources, and the private, maybe, is that the solution, or how do you see that?
Well, I think it's difficult for EIF, the space we operate, to have all the solutions as such, particularly when we target IPO. I would say for the IB group, absolutely, the route to IPO and exit markets is a high priority. And on that, rather than talk about specific solutions, I think it's very important that we continue to engage or engage with, let's say, the stakeholders and the players, exchanges, associations. Specifically for us, what are the type of products we're looking at? So on the scale-up side, we have launched a program called European Tech Champions Initiative. That's the idea of creating these billion euro funds who can take large tickets in scaling up and growing our, let's say, tech champions. That's a mix of policy priorities around tech sovereignty. Let's keep them in Europe. Let's have them list in Europe and stay in Europe and go apart. And why is it important? Because we talk a lot about the States. If you get early in the venture cap table, European investors, pension funds, public sector and other private sector, the decision and the influence they will have later on at the growth stage will be increased. If at Series A you've already got half a cap table with Americans, it's quite hard to navigate that space. So if we have these large scale funds, we believe. The second thing we're looking at is crossover, what you call crossover funds. So it's dedicated, let's say, investment vehicles that are helping SMEs pre-IPO, both in terms of the governance, financing, and that track at IPO stage and even post-IPO. That's quite a nascent market in Europe. It's not in the States. I don't know if the colleagues see that. And that's an area where EIF in our space could directly contribute to ensuring or helping SMEs on the listing journey. So it's really about how we get them to list. So I think their initiatives, we can talk about other debt, like venture debt is a very good tool at early stage, but scale-up debt is something that we're starting to see. It could be increasingly a product in demand that will help these companies. Okay. So it's a blended mix, but sorry, and then I'll be very quick because I'll leave the colleagues. None of this is possible without the private sector. So we need to get the count in the private markets well before IPO. We need to engage in this asset class. And I know there might be difference of opinions here on,
I agree.
on this, but we need to get them in private markets in the VC asset class. And we're hopeful and we're engaged in Denmark and Sweden, and we need an allocation away from the States and into Europe.
Yeah, okay. That's what we have seen a little bit at Alfa Laval. Nikolai, what can we learn from the US? Or can we nothing? Can we not learn anything? Or?
Oh, we can learn a ton. I think one of the most important traits the US market has is this perception of deep liquidity. So when very big companies, the unicorns, the decacorns, are considering doing an IPO, they very often hear from both from the buy side and the sell side that the liquidity in the US is much bigger. But the US market structure actually deals with some of the same issues that we do in Europe, where you have an OTC trend going on as well, where a smaller and smaller proportion of the total liquidity pool is transacted on exchange, and a bigger proportion of the total liquidity pool is transacted off exchange. That being said, the turnover velocity for the market is much greater. And that's why the liquidity picture looks so attractive over there. But there's one thing we also need to remember, which sometimes happens to companies that seek to list in the US as opposed to listing in Europe. And that's the fact that the first time you screw up, the first time you miss your quarterly earnings or you have to downgrade your full year projections, the next 12 months is not going to be great because you are a European company listed in the US. And just like a Swedish investor will have the majority of their focus on Swedish companies, same thing goes on in Portugal or in Poland. All of a sudden you get, I don't know how to say this, maybe a little bit forgotten because local media is not going to write about you because you're no longer on the front page as being the unicorn of with the flavor of the month. So it's not all rosy, but I think the retail community is something that we can be jealous about. The retail interaction in the US is something we can be jealous about. I think the neo brokers that are over there, the Charles Schwab's, Public.com, E-Trade, all of those neo brokers that are out there, the amount of financial literacy initiatives they support the retail community with on a daily basis is insane. It's like 2.5 hours of content for retail investors, allowing them to educate themselves in the public markets, in the stock market. And that's something we can learn from in Europe as well if we want to power the financial literacy journey in Europe. And we have a belief that retail should be co-investors in early startups and in early listed companies. They have their own regulatory issues as well in the secondary market. But one thing they have managed to do really well is that they've managed to remove all of the post-trade complexities that we have in Europe. In Europe, we have, 27 CSDs or something like that. Over there, they have 1. How many?
Yeah, 31.
31 CSDs, which means that the interoperability of those CSDs and the ease of a company listed in one corner of Europe to raise capital from an investor which is based in the other corner of Europe is not only complicated, it's also expensive. Whereas in the US, you have one CSD and you have one CCP. So it doesn't matter where you choose to list, whether it's on NYSE or on ARCA or on NASDAQ. Hopefully that's what everybody does. But it's almost one liquidity pool. It is not one liquidity pool, but the fact that all of the data centers are within a 40-mile radius and they're all operating pretty much with the same market models, it's very easy to access the market, and you are basically competing on trading. You're not competing on settlement. You're not competing on clearing, which is a utility, if you ask me, but it's not a utility in Europe. So they have removed all those post-trade complexities and only focused on allowing companies to raise capital on whatever exchange is over there. But everything that happens after a trade, not that important.
Okay. Delphine, what opportunities do you see for greater alignment or cooperation among European exchanges, the ones that I refer to? Why, for example, Euronext is not in Bulgaria, Hungary, etc., etc. It's somebody else who will have to start there. So we complexify again, although all the efforts that you have done as Euronext to be present in many. So what is the challenge for tomorrow for you?
So I think we are competitors, but we also have the same goals. And I think we are not going to have a nationalization of all the CSDs to create one. There are a number of instruments in which we can create greater fluidity. We're building on T2S, which is a system that enables cross-border investment quite easily. I think we have to combine private initiative and, I would say, public reward. Private initiative, it's what groups like NASDAQ Nordics or Euronext have done, that is to say federating exchanges on the same systems. This is a Euronext position, not a phase one, but I think you need to have a certain scale if you want to attract the investors and the brokers of today. They are bigger, that's a fact. You have to fight on latency. You need to interact with very sophisticated players. So you need a certain scale. And I think this means, given the number of countries in Europe, that it means there can be a number of alliances. So those are private-led projects, and it should be, because that's the way it works in a good way, rather than something that could be underperforming. There is liberty to do so. No one is obliged. There are some initiatives in Eastern Europe working with EBRD on some new types of licenses. So I wish there were 3-4 of us, rather than just the two with that dynamic. And we would be happy having, I would say, 3 or 4 clusters in Europe. That would be the equivalent of what happens in the US, with 2 and some smaller exchange that nobody has heard about, but that actually exist locally. Because it's only from Europe that we think there are only 2 exchanges in the US. That's the first thing. But for that, we need rewards. It's to say, today, Euronext, we have federated 7 exchanges. There's an offer going on on the Athens Stock Exchange. It would be 8 if it goes forward. But we still have 7 licenses. We have had ourselves to organize our college of regulators so that they, on a consensus basis, so it's slow, not their fault, it's the reality of life. And federating 7 decisions in a coherent manner, you can imagine how much work it is. So that is to say, Euronext today is not a group on a regulatory from a regulatory standpoint. We are a corporate group. We are not a regulated group. There's no existence of the group at the regulated level. It's crazy. So the new package of the SIU should cover that. And the second thing that we are proposing is to work on the post-trade that Nikolai mentioned. It's very complicated, so certain boring, but it's actually essential. So we are proposing to reinvest that field and consolidate our CSDs, the notary of the markets, and to be able to offer that to our bigger pond, like I said, so that there is a real fluidity. This is a lot of work, but it will mean, changing habits. We will need to be supported by our clients and by the regulators in, having this new competition.
Allow me to interrupt because we have 1 minute and 10 seconds left for the last question, and I want to have from you a vision about. You have heard the founding, and we have talked about the policymakers and the regulation, but we have not really focused on that one. I am myself on the board of the EFRAG, making the standards of ESG, and I am afraid like hell.
Yeah, so...
because of the burden.
Yeah, but I want to finish with the last thing, which is the practical tools
Okay,
I want
good.
you to consider in the policy making. So just do it quick. I think most founders forgot the benefits of being listed or being on the stock market. And we need to do education of companies and also investors. And as I said before, nobody asked the founders today, have you ever considered listing your company? Then we also suggest that we have a guaranteed loan from the European Investment Bank or other investment banks locally, that you can get your coverage, your cost of doing an IPO on the advisory. I know they do that in Italy, but they don't do that in Denmark. Or maybe you can have the estate aid paying 50% of it, which is what they do in Italy. And then as I said before, we need to work with the pension funds and motivate them. Then we have tax incentives for founders. Why don't we give them a huge tax rebate if they list their company and not moving it away? And then the last one is the saving and investments account, which I read recently that there were recommendations from the EU of taxation, and they were very interesting. One said everything you put in your saving or investment account, you can deduct from your personal income tax, or all the gain you get should be tax-free. Why do we in Denmark pay tax on unrealized gain on the savings and investment account? And in Denmark, they made something really, really stupid. They put a cap or maximum amount of how much retail investors can put in or invest, and that's 22,000 euro. Mm-hmm. In Finland, it's 100,000 euro. In France, it's 200,000 euro, and Italy a little bit more. But every other country, they don't have a maximum. Why do we put a maximum in when we have billions and billions of euro on private saving accounts that are not invested?
Okay. Let me, from my side, give a number of conclusions, and that is, first of all, I think we all agree that we have to encourage an investment culture. One way or another, we have to work on that one. Second, I think we should foster collaboration amongst policymakers, industry leaders, and financiers to have also there more access to. But third, and I have not heard that enough, but I live myself in the world of the small and medium enterprises, we absolutely have to simplify the access to the market, because the burden of on regulation is also an argument that I hear many, many times from our companies that are not capable of answering all those questions that are coming in relation to reporting and in relation to respect of certain elements that are not necessarily for big importance for them, but maybe under the slogan of it's important for the protection of the investor, a burden that is not always in balance. So I think that's the three elements we should consider. We stop here because we are already too late, and I think the other meeting has already maybe started. I don't know. I hope so. I hope not. I'm looking at the organ.
It follows up here, I think.
It was at 5 o'clock?
It's here.
Ah, it's here.
So they have to wait for us.
Okay, then we took the place that we deserved. Thank you very much for your contribution. And